I am going to go through a follow-up on the June 2021 stock for stock on Greenlane Renewables, symbol GRN on the TSX, as well as Xebec, Adsorption, symbol XBC on the TSX. At the time, we wouldn't consider either a buy, but Greenlane was the better prospect of the two. Greenlane is a provider of biogas upgrading systems which produce clean, renewable natural gas from organic waste sources. It currently trades at a share price of 75 cents and a market cap of 115 million at a trailing price to shares of 1.8 times. Xebec designs, engineers, and manufactures products that are used for purification, separation, dehydration, and filtration systems for gases and compressed air systems. It currently trades at a share price of 77 cents with a market cap of 122 million and a trailing price to sales of 0.8 times. Both companies have fallen significantly in price over the past year, Greenlane by roughly 50% and Xebec by roughly 75%, leading to the question, has the drop in price made the companies appealing enough? First off, Greenlane. The company is failing still to produce net income or a consistent operating profit. However, the company has been able to consistently grow its revenue and gross profits. The most recent quarter, Q2 2022, had revenues of 18.1 million and a gross profit of 3.9 million, up 44% and 34% respectively from the previous year. The company has a current sales order backlog of 40.7 million and a sales pipeline of 900 million. And the sales pipeline is just what they've quoted for, but they might not necessarily take on for a contract or receive the contract. A recent highlight is an additional contract worth 13.5 million in South America, which was announced after the recent quarter. The high growth prospects are supported by a strong balance sheet with a cash position of 23.2 million and no debt. However, that cash position has been declining quarter over quarter. Overall, the company has made strong top-line growth since our last coverage, but is still failing to produce a profit, meaning it still does not meet our criteria. Moving to Xebec, it is seeing significant revenue growth, but is running a net loss and operating loss. For the most recent quarter, Q2 2022, revenue grew to 44.5 million from 32.7 million in the prior year, a 36% increase. While operating loss and net loss were 21.3 million and 23.4 million respectively. The company does have an order backlog of 270 million and as well as a net debt position of 37.8 million. Going forward, profitability should be able to improve as the unprofitable legacy renewable gas contracts have been fully written down, meaning that all the losses have been recognized in income. As well, the natural gas segment has seen some restructuring with the aim of achieving profitability. However, the company would still be at a net loss without the impact of the legacy contracts. Part of the company's transformation has allowed them to take on a $113 million contract with Summit Carbon Solutions for a carbon capture solution, which is expected to be delivered by the end of 2023. So until then, you will not see an increase in the profits. Comparing the two companies, Greenlane is still the clear winner, with no debt hindering its position and being closer to profitability. Xebec may see some light at the end of the tunnel by 2023 if it is able to successfully cut unprofitable segments and capitalize on the large carbon solution. As of now, neither of these companies would still meet our buy criteria.